It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on mastering the doji, how to spot these easy-to-read reversal signals and trade them. Let's get started. First, what is a doji? It's a single period candlestick formation. Its opening and closing prices are the same, or at least very close together, so that a common doji looks like a cross, and dojis typically represent the reversal of the current trend. Pictured here is the common doji. Keep in mind that with a candlestick, the vertical top represents the periodic high and the vertical bottom represents the periodic low. The opening and closing prices are represented by the horizontal lines that normally make a box. In the case of a doji, though, the box is small or non-existent since the opening and closing prices are very close or identical. What this means is that in the tug of war between buyers and sellers, there is a draw. If a doji appears during an uptrend, this draw is interpreted bearishly. But if it appears during a downtrend, a doji is considered bullish. Another type of doji is the long-legged doji. Here the variance between the periodic high and low are greater than with a common doji. Long-legged dojis appearing outside of a stock's Bollinger Bands are some of the best indicators of a reversal in all of technical analysis. Here is a Gravestone Doji. In this case, the stock opened low and soared mid-period, but then returned to close near the same price it opened, at or near session lows. What this says is the stock could not withstand the bullish rally, and thus, this is a very bearish sign. Opposite of the Gravestone Doji is the Dragonfly. A Dragonfly Doji occurs when a stock opens high, tumbles in intra-period trading, but closes strong at or near the price it opened. Dragonfly Dojis are rare, but when they occur, they are interpreted very bullishly. Now let's look for dojis on this chart of target, which was chosen at random. Dojis are just that common and easy to read. Can you spot at least 5 dojis? Here I've circled the dojis and labeled them A through F. You notice that point A represented a short-term reversal. The following session, the stock opened low and closed near its high. The right time to buy would have been after the open, which showed that the doji predicted the reversal since it was higher than the previous close. Moving on, we see that point B was a false signal. It was a doji near the bottom Bollinger Band, which should have signaled a reversal, but didn't. No technical tool is foolproof. They only give you a statistical edge. In this case, the doji was wrong. Dojis C and D occurred during an uptrend. They appeared near the middle of the stock's Bollinger Bands, and thus should have been interpreted as breaks rather than reversals. But point E was a very clear indicator of a reversal. It was a long-legged doji, or maybe even a gravestone, and it occurred partially outside the stock's Bollinger Bands. When the stock opened lower and proceeded to fall the next session, it would have been a good time to short. Then at point F, we have a doji coming at the end of a downtrend near the bottom Bollinger Band. This was a good indication of a reversal, and the stock soared over the next couple of months. In conclusion, a doji can represent either a reversal or a pause. One way to tell is to check the stock's Bollinger Bands. Dojis appearing near or outside the Bollinger Bands are stronger signals of a reversal. Dojis occurring near the middle of the Bollinger Bands are more likely to be pauses. In the example from the previous slide, there were 4 dojis that looked like strong buy or sell signals, and 3 of them were right. And finally, you have to know when to get into and out of the stock. Wait to see if the trend is confirmed the next period, but you don't have to wait until the end of the period. Just confirm that things appear to be going as planned and then place your order. We hope you've enjoyed this TradingTips.com video newsletter. Thank you and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit TradingTips.com. Sign up for our free video newsletters. Become a successful trader by visiting TradingTips.com.